Hi, Greg Dorsey here. It's Tuesday, December 6th, and this is Leeb.com, Leeb.com. Well, investors appeared to waver today, following on the heels of last week and yesterday's powerful up move. The recent gains have occurred on expectations that Europe is finally getting its act together, not only in stemming the mounting liquidity crisis, but also in tackling the issues that have plagued its largest problem debtor, Italy. Now, should we see concrete measures to address the monetary union's structural issues at this coming Friday's EU summit, we could well see measurable gains for stocks on top of what have already been logged. Of course, there is ample room for disappointment in the near term as well. Consider, for instance, how many times a negative headline out of Brussels or some other European capital has caused investors to beat a hasty retreat out of stocks. But the market is starting to shrug off news that just a few weeks ago would have been prompted steep declines. One example, the other day, S&P put European countries, including France and Germany, on credit watch with negative implications, yet we didn't have much fallout from that. On a technical basis, the S&P 500 closed just below its 200-day moving average, around 1264. We've seen this happen twice before since last October. And that could prove to be a tough area to crack. We're also not impressed with the volume lately, which today came in at a humdrum 800 million shares or so on the NYSE. Perhaps that's pointing to indications of eroding confidence of the sustainability of this move. But for now, we're inclined to give the rally the benefit of the doubt. Valuations on both a trailing and a projected year-ahead basis are quite reasonable, and we've entered a seasonal period typically marked by an upward bias for shares. So at least for the next couple of weeks, we would expect the stocks would trend higher. Ideally, we want to see the S&P get through its 200-day moving average on a closing basis and stay there for several days running. If we can do that, stocks should continue to march ahead, with 1290 and 1330 being important targets for the S&P. Well, that's all for today. Thanks for stopping by. We'll have more for you later in the week.